Hey guys, it's Rudy coming at you live from Palm Beach in Florida. It is May Day. It is May the 1st. Can you believe it? The first 4 months are already off the calendar. I want to take a few minutes and share some information with you about some alternative energy investments, for sure. Companies that I have never spoken about. I think I've mentioned Petrotal once or twice before because people on the channel have asked about it, but for sure the other four I had never spoken about at all previously or in the past, as I've covered some of the energy stocks with you. But just a little bit of housekeeping first. Wild Saddle said, "How about another clean coal video?" Now, of course, you know I'm a fan of clean coal, right? So he says Monish Babai seems to have all his American investment fund in primarily three stocks: HCC, AMR, CNR. I personally have a large position in ARLP, which is Alliance Resource Limited Partners, which is coal, and they generate so much money and so much cash that they actually use their spare electricity capacity that they generate to mine some Bitcoin. So not a bad idea, Wild Saddle. Maybe I can do that as the next video. But let's sort of take a look at this, and I'll tell you what the genesis is to the story. So in the first place, um, a few weeks ago, I had an opportunity to have a lunch date with Surge Energy, and Paul Colborne is the CEO of Surge Energy. It's a small cap Canadian energy company. So I'll talk a little bit about that one. There's probably a good chance none of you have ever heard of some of these companies. And then ZK Tier. I'm not sure if I'm saying that correctly because I'm not sure what the acronym stands for. It says, "What are your thoughts on the Norwegian company VAR Energy, VAR?" So VAR Energy is Norwegian, so it would be energy with an I. Ticker symbol for people who buy it over the counter is VARRY. I'm going to talk a little bit about VAR Energy, but I'm also going to talk about the Norwegian Sovereign Wealth Fund, which is one of the largest sovereign wealth funds in the world. Anti-Logism said last night I was looking at my email and saw that the Amplify Juniper deal fell through. Amplify is an energy company, and Juniper is I think it's an equity firm, private equity firm that wanted to acquire Amplify. That one needs a little bit of due diligence in terms of a deeper dive to find out who they are and what it's all about. And then Connor Swigert a month ago made a comment which I just kind of kept in my back pocket. He said I would stay away from Oxy right now, speaking as Mr. Oxy. And he says, "I'm a huge fan of Civi, CIVI at the moment." So I have a few companies on here, and what I've done is I've added one, which is Petrotol, which is one of Surge Energy's peers in Toronto. So trading on the Toronto Exchange. So I'm saying here, not all these are equal because they're not all the same, right? So in the first place, New York Stock Exchange, Toronto Stock Exchange is Danish. And then at the bottom of the screen here, you can see that a couple of them, U.S. oil exploration and product. And then we have crude, petroleum, and natural gas. That's Petrotol. And then TSX is Toronto Stock Exchange, oil and gas. So they're similar, but not necessarily the same, right? And then don't be too concerned if I come up with a blank on VAR Energy. I'm going to give you a slightly deeper dive on VAR in just a minute as a Norwegian play. And as I said, I'm going to tie in the Norwegian Sovereign Wealth Fund in terms of giving you a little bit of a foundation there as it relates to VAR Energy. So if you see something come up blank or not applicable, then don't worry too much about it. So are any of these a buy? It's a good question to ask, right? So if you ask the analysts, in other words, the smart people, they say sell, 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 sell. Right. So usually when everybody says sell, it's a good time for us to do a little bit of due diligence and see if any of these might be a potential buy. What you can look at here for the technical gurus is the 20-day raw stochastic, right? So I've talked about this quite a bit. If it dips below 20%, it's a buy. Sometimes it's a screaming buy. Sometimes it dips below 20% for all the wrong reasons, and you should stay away. And that's also one of the reasons why you should do your own due diligence before you make any investment at all. But if you look at the 3-year on the far right-hand side, so Petrotol and Surge Energy and VAR Energy are all sort of at around 20 or so in terms of their raw 20-day raw stochastic score, so they look like a buy. If it's above 80, it's probably been overbought. None of these are even close. And of course, as I said, all the analysts say sell. What about the PE ratio for the technical people? And we should always look at the PE ratio, PE, price to earnings, for the trailing 12 months. All of them are super cheap. And as I said a minute ago, don't worry too much about the not applicable for VAR. In the case of Surge, the last quarter was a loss. And so they don't have a price earnings ratio. But this is really, really super cheap. Now, to be fair, most of the energy stocks right now are super cheap. Even some of the major, including US majors like ExxonMobil and Chevron, etc. They're super cheap right now. Not all of them are super cheap, but many of them are. How about this? So from a key statistics point of view, just look at the delta here, right? So annual sales, this is expressed in millions, 294 million, and then the market cap up here. Yeah, it's expressed as in dollar K. So you add another thousand to that, you have a $300 million company with only a $100 million market cap. In the case of Civitas, you have a company that's generating approximately $838 million with a market cap of 2.5 billion, and so on and so on, right? So there are some sort of variances here which pop, right? So if you look at Petrotal, is generating $111 million in revenue, but its market cap is 540 million. So when you look at the numbers as they appear on the screen, you can sort of see who the outliers are and where it potentially might be a good buy if you look at it from a book to sales point of view, sales to book. And if you think of these companies in terms of the dividend they all pay a dividend. In the case of a company like Surge Energy, it's actually a huge dividend and they pay it monthly. Is it sustainable? Yes or no? There's the most recent earnings, -2 cents, that I alluded to just a minute ago. And that's why they don't have a PE ratio. So there's lots of stuff going on this chart that you can use perhaps just to get an idea, just as a snapshot, sort of where the company is and what it's doing, right? So I'm always looking for the outliers or the anomalies here that jump at me, right? So a company that generates $300 million in sales with a market cap of only 104 million, right? Or $5.2 billion in sales with a market cap of only 2.5, right? So those are things we want to look at. So if you look at it in picture form, for the people who like to follow pictures rather than screens full of numbers and rows and columns, you can see that the only one that's actually performed reasonably well year to date is Petrotal, and that's because it's flat. Everything else has been quite horrible, right? So in the case of Amplify, -52%. And, anyway, none of these numbers look good, but I think that's fair right across the energy sector right now. Everything's pretty much underperforming. So once again, you have that situation where you can say, what do you do now, right? So you can do nothing and just wait, which is what I'm doing for the most part, or you can nibble a little bit at the edges and buy some more while the prices are low. I've done that a couple of times. For instance, on Phillips 66, I added to my existing positions. Or otherwise, you can say, I'm just going to buy it because it's cheap. Careful before you jump in boots and all, and maybe diversify a little bit as well if you're going to buy at all. Let's look at them individually quickly, and then I'm going to take you into the Norwegian Sovereign Wealth Fund so that you can see what the really, really rich people are doing, right? So this is Amplify. You can buy it currently. Over the counter, it's AMPY. I'm sorry, it's not over the counter. It's on the New York Stock Exchange. You can buy it for $2.73. That was earlier today. So at 1:47, it's now almost 5 p.m. Eastern Standard Time. So a couple of hours ago, it was trading at $2.73. Year to date, it is down 54%. Year to date is just 4 months, right? So if you were in this position at the beginning of the year, you're probably feeling quite sad and sorry when you look at your portfolio, especially as it relates to Amplify Energy. So on the other hand, you could say, is this a potential opportunity to snag some more shares while they are super cheap? Make sure you do your due diligence and check your financials as well. Look at the debt they hold and stuff like that as well, right? So there's lots of things that you want to look at before you jump in boots and all. And in fact, maybe you don't want to jump in boots and all at all, because sometimes you're catching that proverbial falling knife, right? The PE ratio, 8.8, is pretty cheap. And the 1 year target estimated price is $10.25. Now that would be quite a leap. At the beginning of the year, it came from about $6 down to where it's trading now. So Man, this thing's taken a hit. Is it a buy? I don't know. If you have Amplify Energy in your portfolio, maybe you can let us know why and share why you think it might be a buy. How about Civitas? Right, it's year to date down 40%. Also taken a huge knock, right? So earlier this year, at the beginning of the year, it was trading at about $50. Now it's trading at $28, right? So got a PE ratio here of only 3.3, 1 year target price of around $47. That'd be a nice uptick, right? And a nice big fat dividend, forward dividend yield, $2. At the current price, that's almost 7%. Looks like a pretty good buy, possibly. I don't know. I don't have it in my portfolio. You can tell me if you do. Petrotol, this one's over the counter if you want to buy it in the United States. PTALF is the OTC, over the counter ticker symbol. You can buy it for 41 cents. Year to date, it's actually up 5%. So it's the outlier here. And currently trading at about 41 cents. And you can see on a couple of these peaks, it went up over 50 cents per share. PE ratio is super cheap, 3.4. You know, could be a buy. I'm not sure. Surge Energy. Now, I have an interesting little backstory here to share with you because I actually had a lunch date with Paul from who's the CEO of Surge Energy on March the 26th. I'll tell you about that one in just a second. So you can buy it over the counter as ZPTAF. If you buy it in Toronto, it's SGU from memory. $3.40 is where it's currently trading at. Year to date is down 14%. This one's the mega dividend paying stock, right? So down here at the bottom, you got a forward dividend of 37 cents, 11% on an annualized basis, and pays a dividend monthly. So you're basically getting 1% every month, right? No PE ratio because it reported a loss last month. So now when I had lunch and Paul was presenting and sort of explaining the company to me, I looked it up actually while we were chatting, and the stock was trading at about $6.31. That's why I snagged this particular slide here. This was the date of our lunch date, March the 26th. And I was thinking of potentially opening a position in Surge Energy, $6. I looked at the target price, $8, $9. Looked pretty good, especially if you could get in at about $6. And I was hesitant, and sometimes you get lucky when you hesitate just a little bit or take a step back and take a deep breath and say, do I want to invest in this? And if so, do I want to invest in it right now? And if so, how much? Once again, I don't want to jump in boots and all. If I did, I'd buy a little bit at $6.30 or thereabouts. And on the way down, I might snag a little bit more. But look where it's trading right now, right? So this is Surge in Toronto, so SGY, not SGU. And it's trading at $4.70. And on the day I met Paul, it was trading at $6.30. Where's it going to go from here? I'm not sure. Is that dividend sustainable? Well, we don't know, right? So March the 27th, Simply Wall Street published this report, and I highlighted a couple of pieces here. So Surge Energy reported a loss after tax last year. It's for the fiscal year 2024, which means it's paying a dividend despite being unprofitable. We need to see if it generated enough free cash flow to fund the dividend. If it didn't, then it must have either paid from cash in the bank or by borrowing money, neither of which is sustainable in the long term. I'm not sure. I could do a catch-up call with Paul Colburn and sort of see where they're at and what they're doing and what they're thinking or whatever. It's a great company. It's just, man, it's taken a beating, especially since Liberation Day, right? That was April 2nd when President Trump said it's Liberation Day. That was also the day liberated us of all our cash in our portfolios, right? How about this one? So I said I'm going to talk a little bit about VAR, and I also want to talk about the Norwegian Sovereign Wealth Fund, right? So VAR Energy, with this interesting writing here, which obviously I have no knowledge of because I don't speak Norwegian. Over the counter, you can buy it as Varry, VARRY. Earlier today, 4 o'clock, it was trading at about $5 at the market close. Year to date, it's down about 20%. It's actually not too bad. I mean, all the energy stocks are down, but this was not that bad. Look at this monster dividend, right? 17%. That's the current yield. It's paying a dividend of 89 cents on an annualized basis, which is yielding 17% at the current stock price of $5. The PE ratio is decent, 9.45. So an interesting potential buy here, especially for the people who buy the stocks for dividends specifically. I might be inclined to lean more towards VAR Energy here than Surge, for instance, because I'm not sure if the Surge dividend is sustainable, whilst the VAR dividend might be more sustainable. What exactly is VAR Energy? So where did this come from? So actually in 2018, the company was founded as a merger between two large entities. One of them is AnySpa. Um, but more than 50 years of operations on the Norwegian continental shelf, flexible and resilient asset portfolio with ongoing development projects, with equity stakes in around 50% of all producing assets on the NCS, the Norwegian continental shelf. We're the third largest oil and gas producer and one of the largest exporters of gas to Europe from North Norway. Um, it's actually a very interesting company, right? So what I wanted to do is talk a little bit about this because most of you have probably never even heard of this before, but the Norwegian Sovereign Wealth Fund is actually the government's pension fund. So Norway, over the past sort of 50 years or so, has moved from being a country that was really, really poor to being super, super rich. And it's all based on oil and gas, right? So if you have any questions as to how oil and gas can lift people out of poverty, Norway is a fantastic case study to write a white paper on. The current one that's unfolding right before our eyes is Guyana in the far northern part of South America, kind of sandwiched between Brazil and Venezuela. Guyana is currently experiencing GDP growth of around 23, 27% on an annualized basis. Is huge, right? But this Norwegian sovereign wealth fund is worth $1.7 trillion. It is one of the largest funds in the world. And if you equate that in terms of Norway's small population, it's approximately valued at around 325 US dollars per Norwegian citizen. The fund is actually run by one of my wife's connections, who's Nikolai Tangen, and they are connected, for instance, on LinkedIn. And he was previously the chief executive officer and chief investment officer of AKO Capital, which is itself a billion-dollar fund he founded in 2005. So he was a very successful fund manager. And then he took this gig as chief executive officer of the Norwegian Sovereign Wealth Fund, which is quite a step down because one minute you're running your own fund and making a few $100 million per, in terms of personal earnings, and the next minute you're working for the government and making, in his case, probably, a few hundred US dollars on an annualized basis in terms of salary, right? But he's done exceptionally well. So this fund value, I wanted to just spend a few minutes here and say, what exactly are they invested in, right? So it's a $1.7 trillion fund. Most of their investments are in equities at 1.2, and then 462 billion in fixed income. And even though they are Norwegian, and Norwegian is obviously famously very, very green, the Norwegian Sovereign Equity Wealth Fund has only got $2 billion only $2 billion invested in renewable energy. They know what they're doing. They're smart people there. I don't want to invest in renewable energy either. You just lose all your money. So they have most of their money in equities and fixed income. The reason why I included the snapshot here for any SPA is because the Norwegian Sovereign Wealth Fund has a position of $604 million invested in any SPA, which gives them 1.3% in terms of voting ownership, and any spa owns 70% of VAR, so VAR Energy that I just spoke about a minute ago. So even though the Norwegian Sovereign Wealth Fund does not directly own VAR Energy, which is a Norwegian energy company, it owns a large chunk of any spa. So what do their equities look like? And this is just for your interest, right? So these are their largest positions. In fact, their top 10 positions. Now, what I did here was I looked at their top 10 positions and I took a snapshot of the S&P 500 ETF you could buy, which is called SPY. It looks pretty much the same, right? So Apple, Microsoft, Nvidia, etc. You see it's pretty much the same. The only difference here is the weighting, right? So where you have Berkshire Hathaway here as sort of at number six and Tesla at number 10. They have Tesla at number nine and Berkshire Hathaway at number 10, right? So it's pretty much the same stocks. They just weight them a little bit differently in terms of how much of it they hold. But in theory, I mean, like without even doing all this homework, you could almost say if you wanted to copy the Norwegian Sovereign Wealth Fund, or if you wanted to copy what SPY does on the US exchange, and you could just buy it SPY. You could pretty much hold exactly the same stocks and you don't even have to do any homework. They have done it for you, and it's pretty good. How about their fixed income funds, right? It's always interesting just to look at where the smart people invest, right? So they have a huge position here, right? So $462 billion invested in fixed income, of which 157 billion is invested in US linked bonds and treasuries. Everything else pales by comparison. And interestingly enough, right here at the bottom, the number 10 position, European Union, 5 billion in government related bonds. So even though they are a European uh, domiciled country, and of course they have other European positions as well, Germany, France, Italy, Netherlands, etc. They have some interesting fixed income holdings here that they hold with a very, very heavily weighted position in government of the United States of America, index-linked bonds and treasuries. So at a snapshot, you can see that the Norwegian Sovereign Wealth Fund, one of the largest wealth funds in the world, invests predominantly into US equities, as do I, and probably most of you as well, unless you're doing something differently, which would be interesting. You tell us in the comments if you're doing something different. Anyway, those are the five that I want to talk about in this particular instance here. So Vara Energy would be an interesting play for me. From a dividend point of view, I think that one's probably okay. Surge, I like the dividend. I'm not sure it's sustainable, so maybe I'll just wait that one out and see where it's going. It's currently trading in Toronto at about $4.20 Canadian. So you can buy it for about $3 US. I'll hold off on that one. Petrotal is an interesting company. Maybe, I don't know, you could add it to your watch list. Civitas, nice one. Amplify, interesting too. Of the five, I'd probably say Var Energy is the nicest one. So thanks for posing that question in the first place, and thanks guys for asking these questions, because if you don't ask these questions, I might not even look at these companies, because some of them, with the exception of Petrotal, which I had heard about before and looked at briefly previously, and then of course Surge Energy, I had the benefit of having a lunch date with the CEO. But if it hadn't been for that, I wouldn't even have heard of any of these companies at all. So thank you so much for not only watching my videos, but also for all the comments and communication and sharing some of the stocks and stock tips that you might have, including things that I might overlook and that could be interesting to the rest of us. So on that note, guys, thanks for watching. Take care. Bye-bye.